Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Though SGX Nifty was indicating about 80-point gap down because of negative Asian cues, we opened very decent. Nifty opened just gap down 30 point. In fact, Bank Nifty was higher in the pre-market. And as soon as market opened, it came down a little bit, but the buying started after that. And mainly the rally was led by Reliance Industries. So Reliance Industries shot up nearly 5% in just two trading sessions. Yesterday about 3%, today about 2%. So 5%, that is the most heavy weight in the index. So no wonder market has seen a good amount of short covering. IT also helped today, and because yesterday, though the Dow was down, the Nasdaq was higher. So usually the trend I see, as and when Nasdaq is higher there, the IT stocks tend to do well here. So IT stocks were higher, Reliance is higher, and what else you want? The Bank Nifty was not actually performing well. Nifty was outperforming, but late afternoon there was a short covering in Bank Nifty also. So Bank Nifty shot up almost 400 points from intraday low to intraday high after 130. So that made the Nifty to cross 18,000. Today it was an all-round buying, mid cap, small cap, next 50 is a broader market was outperforming, Nifty, Bank Nifty, but surprisingly the HDFC Bank and HDFC since morning has been weak. And it was a surprising. Few days before they both were very good, but now it's turning bad. And in fact today the major draggers were two HDFC stocks, HDFC Bank and HDFC, and two FMCG stocks, ITC and Hindustan Unilever. Other than that, most of the stocks were higher. And yesterday the auto index was down, but today auto index has recovered. FIAs, on Friday they bought for more than 1,000 crores last Friday, and people thought it's just only one day offer. Then again Monday they bought for more than 1,000 crore, and people thought it's because of Coforge block deal. But yesterday once again, for the third consecutive day, FIAs bought for more than 1,000 crore. So the people understand, the sentiment is changing among FIAs. They cannot keep on selling, for nearly 2.5 months they kept on selling. And surprisingly, today also they were net buyers, and today they bought about 400 plus crores. Domestic institutions bought 500 plus crores. So put together they bought about 1,000 crores in cash market. Finally, the market broke out of the range, that is budget day range. So the budget day high was about 17,972, and today that was crossed decisively, and also Nifty closed above 18,000 for the first time in February series. So the entire February series, and today is the first closing above 18,000. On budget day, the closing was not above 18,000, even intraday also, but intraday the futures was above 18,000, but not the spot. And today is the first time both Nifty spot as well as futures closed above 18,000, which is considered to be a bullish sign. However, given the global cues, the things are not going to be one-way movement. There will always be volatility, and because tomorrow is also a weekly expiry, so the markets are bound to be volatile. So India VIX once again has come back below 13. The below 13 is considered to be too low, and market may think, at least for next 1 month there may not be any big news. And I think now the US inflation is also over, and in the near term, I don't think that there is any big uncertainty. Maybe Karnataka state election, that is in the month of May, and then November 5 state elections. So that may bring some volatility, but until then, our VIX is going to be ultra low only. Simply speaking, Nifty has closed above 18,000, but the ride from here may not be very smooth. The markets will continue to be choppy given the global sentiment. So tomorrow is the weekly expiry. So it will be interesting to see whether the market will be building on the momentum it had today or not. So it will be very good if Nifty closes above 18,000 tomorrow. So we can be more bullish. So rest of the things we will discuss tomorrow morning. Hope you enjoyed watching this video. Thank you for watching.